and welcome to Blocks Live TV. Today is Tuesday, March the 19th. We're now live with the latest in the crypto world. It's 10:30 a.m. in New York City, 2:30 p.m. in London, 11:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. The crypto market capitalization has seen an increase of nearly $7 billion over the past 7 days and has broken through the $140 billion level on various occasions since March the 16th. Well, let's take a closer look in today's Crypto Now live show. The cryptocurrency index CCI 30 continues to gradually rise and currently hovers around the 2,400 point level. The month-to-date change stands at 8.2% in the green, and the index is up by double digits year to date. The 30-day Bitcoin volatility index has held steady for more than a week at approximately 2.6%. Despite climbing over 5.8% in December, over 6 months it's virtually unchanged at 2.7% in October. The 24-hour traded volume indicator has moved below the $30 billion level after having peaked at $35 billion. The Bitcoin dominance indicator continues to hold below the 51% level to where it dropped last Friday. It's the lowest level since January. The top 5 digital assets are mostly in the green over the past 24 hours. Bitcoin is slightly north as well as it holds ground above the $4,000 level. Ether has been facing resistance around the $140 mark. Its weekly performance puts it in the green by about 2%. XRP stands slightly in the red, although it's still north by approximately 2% over the past 7 days. Litecoin has found support above the $60 price level. EOS shows a slight loss, but it's holding up to a weekly gain of about 2%. Now, the CoinHunt 360 heat map is mostly red with some scattered green across the lower cap assets. According to the token spread website, the XMO Exchange posts the top spread for Bitcoin dollar of 0.18%. The BitMEX and Bitfinex exchanges show the biggest intermarket spread of nearly 3%. Well, now let's take a look at some of the characteristics of Theta Network and its native token. The project looks to introduce decentralized video streaming that's powered by users and an innovative new blockchain. Its tokens are used as an incentive to reward individual users to share their computing resources as relay nodes for video streams. The Theta mainnet was launched less than a week ago. The token was initially launched on the Ethereum network, and all of the holders received its native tokens according to a March the 12th snapshot of Ethereum blockchain. The price of the digital asset peaked at nearly 30 cents last year and has stabilized around the 13-cent mark over the past week. We'll now review the performance of the various cryptocurrency asset classes. So we use data from the Messari website, which groups cryptocurrencies into 5 major categories. Starting off, the infrastructure group shows a slight increase, even though most of the top assets are trading lower. The media and entertainment category has gained less than 1%. Edgeless is one of the most bullish assets with an increase of 2.5%. The financial sector is up by nearly 0.5%. Binance Coin, 0x and Augur are all up by more than 1%. The currency category is slightly in the green as the Stellar Lumens shines with a rise of 7%. And lastly, the services section is the top performer with an increase of just under 1%. The Huobi and Ravain tokens are some of the bullish drivers. That's where the 5 major cryptocurrency categories stand so far on this Tuesday. We'll now focus on the most significant moves among the top 100 cryptocurrencies to identify the top gainers and the biggest decliners. The majority of the digital assets are starting to head over to the green territory. The top performer here is Kin, showing a gain of nearly 35% over the past 24 hours. The token has been on a path north over the past week, and its total market cap has more than doubled in a period of about $50 million. The Maximine token is yet another altcoin that's been on a steady path north since last week, with a climb of nearly 80%. It shows a gain of approximately 20% over the past 24 hours. The Raven coin is up by about 17% since yesterday. This mineable coin has been on a steady climb over the past week, although with some fluctuations. Its market cap has increased by about $30 million in 7 days to $107 million. The KuCoin shares show a 24-hour gain of about 10% as it continues a month-long bullish trend that began a month ago after announcing a upgrade. Stellar's XLM coin is surfing in the green with a 5.7% price increase over the past 24 hours. The virtual asset has been climbing steadily with a few fluctuations throughout the past week. It's recently announced a significant partnership with tech giant IBM to launch a stablecoin later in the year. The top bearish coins are showing losses in the single-digit zone. The Engine coin tops this list for now with a price drop of about 7%. The virtual asset showed some bullish performance last week, so despite the decrease of the past 24 hours, it's still up about 3 cents compared to 7 days ago. ABBC coin has seen a bullish turn bear over the past week. In the last 24 hours, it shedded about 6% of its value. The Repo token follows in the list of biggest losers with a move south of about 5%. A few days ago, it's seen a bullish movement that pushed its price upwards by about 15%, but over the week it's virtually unchanged. The Insight Chain token has shown quite a few fluctuations over the past week. After a 24-hour downward move of close to 5%, the digital asset stands at about 25 cents. The Digibyte mineable coin shows a decline of about 5%, with some ups and downs. But over the past week, it's traded mostly sideways with only a few climbs and some minor corrections. Well, these are the top 24-hour moves during the European morning trading session on this Tuesday. We'll now join our crypto experts Edward Iskra, who's a member of Bitcoin Gold Board, and Jason Fernandez, COO and co-founder of AE Token. So Jason, Edward, thank you so much for joining us on the line today.
Hi, Jessica.
Hi, Jessica. Hi, Jason.
Great to have you back. So Edward, we'll start with you now because we have seen Bitcoin broke through the $4,000 resistance level over the weekend. Our 24-hour traded volume indicator has been poking above the $11 billion mark in recent weeks for the crypto king. So Edward, can we expect the price to hold the ground above this 4K mark this time around?
I'm pretty sure we can. The odds are very high. We've been saying for weeks how the market has consolidated, how there are so many positive things building, how the market panics and fears from the past year have mostly abated. But over the past 3-4 days, what I've really been hearing in the zeitgeist is how positive and optimistic everyone is. A lot of people who used to be bearish or used to be uncertain have now flipped, and they're like, okay, but the bottom's over. With that kind of sentiment among the people who are typically a bit bearish, it's hard to see how we can have anything but upwards movement going forwards.
And that's interesting. We're seeing a little bit of a change in perception there. Jason, what's your thought? Are we expecting to hold the ground above the 4K mark?
Really, there are two factors that form the reasoning for this, and one is essentially trading volume and active addresses. So we've seen that trading volume, as you pointed out, has really skyrocketed. It's increased by some 150% in the last 5 months, and daily trading volumes have reached the highest level since January. So recently, Kevin Roop, who's an analyst, pointed out in a tweet that only 9 days in the last 12 months have had 10 billion plus in volume, and 5 of those have been in 2019. So I think really high volume is a really good sign, and usually there tends to be a really high correlation. So, for example, there tends to be some sort of relationship between the amount of funds transferred through the Bitcoin blockchain and the price of BTC versus USD. Generally speaking, the other factor is active addresses. So we've seen the number of active addresses, Bitcoin addresses, just shooting up. So it's something like 664,000, up from 569,000 in January 20th, and that's somewhat a dangerous. Active addresses is somewhat a dangerous thing to look at because it could mean two things. One is it could mean new investors coming into the market, but it could also mean people that had dormant Bitcoin addresses are coming in the market to sell. But the fact that the Bitcoin prices are up, that implies that the active addresses are actually doing a lot of buying. And I think that those two things, the volume and the active addresses going up, tends to indicate to me that we're looking at staying above 4,000 for a while, hopefully.
And that's interesting, and Jason, will stick with you on this, because if we compare this to the previous attempt, it did see that we failed to hold this $4,000 level. A sharp pullback followed after this. Will BTC drop sharply if the $4,000 support level fails to hold? What do you think?
So I think that would be a concern if volume also drops. So if volume is able to stay up, and it seems like there's continued interest in Bitcoin, I think you'd end up seeing a lot of support at the 3,900 level, and then subsequently at the 3,700 level. But mostly even at the 3,900 level, as long as volumes stay up, it's not gonna start plummeting or anything like that.
And Edward, what do you think? Do you agree with that? And are we comparing volumes? Is that the right way to go about it?
Comparing volumes is one thing to do, but it's also important to look at the broader psychological sentiment that's going on. A lot of the strength of the 4,000 as a resistance on the way up or support on the way down has to do with what people fear might happen next. And you might recall that back in November during the Bcash, Bitcoin, Bitcrash, ABC, SB cash wars, when the market really collapsed during this battle, the price for Bitcoin collapsed all the way down to 3,200 and change. After that, it came back up to the 4,000 level, and then it dropped again, but only to the 3,450 range. And then it eventually recovered to close to 4,000 again and dropped to like the 3,600 year range. Now, every time we dropped off from 4,000, a lot of people were taking their temporary profit. They were taking those revenues out in fear of another collapse well below 4,000. There were a lot of doomsayers saying, we're going below 3, we're going below 1,000. But every time, Bitcoin failed to drop as far as the previous time. Every time it rebounded sooner from a depth perspective. So at this point, there's a different kind of market sentiment. At 4,000, people aren't afraid it's going to drop to 1,000. They're afraid, it might dip to 3,900 before rebounding up. And that's not going to drive as many people to shy away and start taking a profit at 4,050 or 4,100. That's really going to buoy the price and increase the power of 4,000 as a resistance level, as a support level to avoid dropping the price any further. The other thing I'd add vis-a-vis volume and active addresses, I'd love to see some detailed statistics on that, looking not at active addresses, but active addresses based on the size of the transactions and the size of the funds held in those wallets. Because we have to remember that one thing that's dramatically different about Bitcoin compared to a year and a half ago is that the fees are tiny in comparison. With these very small fees, a lot of people are beginning to use Bitcoin for things that they wouldn't do before. When you had to pay $10 to do a Bitcoin transaction, you'd be less likely to act. But if you only have to pay 10 cents, you can be a lot more flexible in what you do. There's a ton of activity around Lightning Network, and although Lightning Network is off-chain transactions, every channel that gets opened and every channel that gets closed requires an on-chain transaction. And we all know there's now, I can't remember the figures. I don't want to misquote, but there's a huge volume of activity on Lightning. And also, we have to consider that some people might be moving Bitcoin that are dust amounts, that are old, that are moving them now because transactions are cheap. If you know transactions are going to go up in price, the transaction fees are going to go up, then you'd go ahead and do your cleanup and maintenance now while you can. We've seen this before, especially with exchanges who may have lots and lots of accounts with little bits of dust in them. They can be cleaning those up. That kind of activity can only happen when fee transactions are very, very low.
And I want to ask you both this separately. So various experts believe that the 15-month market downtrend has been broken at last. So Edward, I'll start with you. Do we think this is actually the case? Because you both sound quite optimistic for different reasons.
I think it's definitely the case. I think it might have been the case, back in November if we didn't have the cash wars bashing all the prices down and causing that massive drop. And since then, we've all been sort of regrouping while people do their development. But I'm more confident than ever before that the long crypto winter is over. How soon before we get a serious rise above today's levels, that I can't predict. But I'm more confident than ever that the crypto winter is over.
Wow, okay. And Jason, what do you think?
Yeah, I said I would say that's true as well, because I think if I had a magic 8-ball, I'd say signs point to yes, because all the indicators that we see are all positive. And as Edward pointed out, there has been a change in sentiment among investors, and they do seem overall much more positive. Even some serious crypto skeptics have come out recently and said that they were wrong. A lot of celebrities have sort of jumped into Bitcoin, or like Tesla, for Elon Musk, for example, of Tesla. So I think that there's been a lot of good sentiment, and I think even when you look at the numbers, trading volume, active addresses, etc., those are all positive indicators. So I would say yes.
Fantastic. And now, Jason, we'll stick with you here because on the topic of today, we've got another topic at hand. Coinbase Exchange announced they're exploring additions of several assets last year. Cardano's ADA cryptocurrency was the only one from the shortlist that hadn't been added yet. Now, the asset is up by approximately 25% over the past week. We want to understand, is expectations for the listing driving this asset higher?
Yeah, I think so. I think that's definitely one of the major reasons for its pop. Especially with cryptocurrencies that are popular but aren't really on a lot of exchanges. When they do end up showing up on an exchange, that ends up giving it, because of the liquidity, it ends up giving it a pretty significant pop. So we see in the last 7 days, Cardano has been really the second largest gainer among the top 14 cryptocurrencies, and it grew something like 10% in just a week. And that's pretty much more than Bitcoin and Ethereum has grown, in the same period of time. So that's certainly, I think, the fact that they're listing on an exchange probably has something to do with it. But there's also a lot of other interesting indicators. So, for example, the firm Cardano said that they're going to produce and spread out ATMs across Japan, and that's going to have real world applications for digital currency. Bring real world applications for digital currency to the country, and it could really increase and basically lead to an increase in massive gains this year. Also, they are also included as one of the founding members of the International Association for Trusted Blockchain Applications, and that's a sort of organization to further the progress of blockchain technology and crypto-related adoption. And I think that sort of implies that they're one of the major cryptocurrencies in that space. Finally, they've also said that they're going to be integrating Ledger Wallet, so they're going to be Ledger Wallet compatible. And they recently announced that they've been working on some code. So they recently announced a milestone in blockchain interoperability for those blockchains that work on proof of work. So essentially, they said that they can really they've really created a solution for blockchain interoperability, and that's really that could also affect the cryptocurrency like long term in a positive way. So I think there's been a lot of fundamental indicators for Cardano that's sort of leading to its rise.
Okay, fantastic. And now, Edward, we'll turn to you and ask you about Stellar Lumens, which has been shining during the recent weeks as the asset looks to rival Binance Coin for 7th position by market cap. So IBM announced the launching of a WorldWire on the Stellar blockchain. So Edward, is this a major bullish signal for the project and the token?
Yes, it's definitely bullish for the project and the token. This is just the fruition of the work we've been seeing going on for months and months and months among the developers and in the major traditional players. And there are traditional players in the financial institution space like JP Morgan, but there are traditional players in the IT space like IBM. And this is just that coming to the fore. I'm not going to go into the technical analysis of Stellar Lumens and how it might be affecting the price now. I'll leave that for Jason. But this is absolutely a major driver of bullish sentiment for such coins which have such interesting use cases.
Okay, fantastic. So Jason, we'll turn to you then. Stellar Lumens, what are your thoughts? Is it a major bullish signal for the project and token?
Yeah, so I think IBM has always had this sort of image of being really straight-laced. You go back to the Apple versus IBM days, where IBM will consider sort of like the suits in the IT industry and sort of very, very traditional and conservative. And for them to sort of jump into cryptocurrency is not only an amazing sign. They've already shown a lot of interest in there, but the fact that they would choose Stellar Lumens to essentially using the Stellar protocol to essentially power their cross-border payments and remittances service. I think that's a really good sign for Stellar, and I think having like Edward said, having a really traditional company like IBM back you, I think really improves basically the outlook for the cryptocurrency. I mean, and certainly, IBM didn't really pick Ripple for this. So given the fact that they picked Stellar, I think that's a really good sign for Stellar. And I think overall we've seen Stellar do really, really well, even based on the new listings. Every time they list a new exchange, they seem to pop up. So I think overall, I'm really bullish on Stellar.
Okay, fantastic. And now, Jason, we'll stick with you because Coinbase Pro exchanges have recently announced an increase of fees. So we spoke about trading volume earlier on. If we focus on Coinbase Pro now, could you explain what this means for traders and the market?
Right. So essentially, they've changed their fees to where bottom tier traders see a hike, and essentially higher value clients are paying less. And the main area this has changed are maker fees and taker fees. So generally, maker fees are paid when you add liquidity to the order book by placing a limit order below the ticker price for buy and above the ticker price for sell. On the other hand, taker fees are paid when you remove liquidity from the order book by placing any order that is executed against an order on the order book. So thus far, maker fees have been low to zero. And the whole concept of the reason that is because the idea is because of the decentralized nature of blockchain, liquidity is a huge obstacle. So the argument is having like a zero maker fee would be attractive and encourage customers to place limit orders, and that would of course boost liquidity. But and so sort of the conventional wisdom is that the introduction of maker fees will discourage participation and reduce liquidity. Moreover, they've also said that they're going to be removing stop orders. Apparently, what they're saying is that these changes are going to increase liquidity by reducing the delta between maker and taker fees, which they say will have a cascading effect, helping traders to have better trading opportunities. But most people basically don't really believe that's the case and believe that that this will actually hurt smaller traders and sort of pull away some interest in the industry. And so I think their move has been pretty controversial. But I mean, they essentially in the same Coinbase has also been questioned. People have also said that it's sort of weird that they're going to disable stop market orders because they're saying that the stop limit orders sometimes fail to execute because of slippage. That's the argument. And perhaps that's that there may be other workarounds other than to disable stop market orders.
And you're right in saying that some people have viewed this as quite a controversial move from Coinbase Pro. Edward, I would love to get your insights on what we have seen coming out of Coinbase and what this means for traders in the market.
Well, there's the question of what it means for traders, but also what it means for retail exchangers in the market. Because remember, Coinbase is huge in the retail space as well. That's people who are just doing small amounts of exchange. It's important to point out that they didn't just tighten the difference between maker and taker. And to be clear, their taker fee was 0.3% on each trade for the bottom tier, for people trading up to $10 million worth per month. And their maker fee was 0%. So they were really trying to entice liquidity to come in by saying, we're not going to charge you to place a limit order. We're only going to charge you if you do a market order. But that makes them a little uncompetitive with some of the other exchanges because most exchanges were charging about 0.25% for market orders, not 0.3%. And on the other hand, a lot of the other exchanges had maker fees of 0.25%. So they were getting a 0.25% in, a 0.25% out, depending on which way you want to place your orders, where Coinbase was charging 0.3 for one and nothing for the other. So they've now reduced it so their base level maker fee is going to be 0.15% instead of 0. So that's a significant increase from 0 to that. And their taker fee has come down to the market typical average of 0.25%. And it's notable that the spread between the two is now just 0.1%. And I think that matters for a couple of reasons. The old spread between maker and taker was 0.3%. The new spread between them is 0.1%. There's a lot less incentive to place a limit order instead of a market order if you're trying to save money. And that matters for a lot of small investors and a lot of small traders. If you look at the order books on Coinbase, they always looked like the aberration compared to all the other exchanges. In other exchanges, the order book would have smaller and smaller orders as you get closer to the actual spread. If the price of Bitcoin is $4,000 and 1 penny, you see very few orders at $4,000 2 pennies or $4,000 even. And as you got further from that price, you see the volume of orders, the liquidity go up and up and up. Coinbase would never look like that. on Coinbase, if the price was 4,001 penny, you would see a ton of orders at 1 penny and then nothing for the next couple of cents going up. And you'd see a ton of orders at 4,000 even and almost nothing as you go down further, because all these limit orders would cluster right next to the actual current price. And that happens because people are trying to avoid the fees. These are largely people who want to get in or want to get out. They should be taking liquidity off the book and paying that 0.3% fee, but instead, they're just placing limit orders right above and right below and causing this pile-on, this huge cliff of orders in the book. This will remove that distortion. This will smooth that out, allow it to look like a market, make them more competitive on the market order side, and encourage people who aren't really traders, people who are really just trying to exchange funds. It'll encourage them to just exchange funds and not try and become amateur traders.
Take to have. So Edward, just quickly, I want to ask you, while we are on the topic of exchanges, we have seen reports emerge. The largest cryptocurrency exchange in South Korea, Bithumb, has reduced its staff by up to 50% and has plans to do so rather. Is this a sign that the big exchanges could still be in trouble here? What's your outlook on it?
Yeah, so Bithumb is definitely obviously having some revenue flow issues because they wouldn't be cutting 50% staff if they had plenty of money for everything. It can also be a good opportunity to clean house. You know, places that have grown overly large during boom times might have too many people hanging on and decide to clear out some of the deadwood. But with a 50% reduction, you know it's going to be finance driven. But it's not a huge negative sign. Quite honestly, we should have seen them probably do it earlier. Volumes have been going down. They probably had this plan to cut this staff for some time and finally executed. On the plus side for the exchange, since things are turning around now, volumes are turning up now, and we can expect all the exchanges to do better as the prices resume coming up, they'll be very well positioned to make very good profits as things rise because they'll be more efficient, because they'll have fewer unnecessary headcount. This might also signal that they're interested in doing an IPO or interested in looking for an acquisition. Whenever you do a big cut of headcount, if it's not because you're absolutely forced to by your lack of revenue and your lack of reserves, then it's probably because you're trying to make your bottom line look better. If you're trying to make your books look better by removing the salary expense by cutting headcount, you're probably hoping to affect your valuation in an acquisition of some sort.
Interesting. Well, thank you so much, Edward, Jason, for joining us on the line for today's live show. It's always a pleasure to catch up with you both, so thank you so much for your time today.
Thank you both.
Thank you. Now, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. The total market capitalization has once again edged higher as it looks to establish ground above the $140 billion level. While trading has remained slightly slower than usual, and the 24-hour volume indicator is close to $28 billion. Stellar Lumens is still the most bullish of the major cap assets, and it's stepping on the heels of Binance Coin in a competition for the top 7th spot by total market capitalization. This wraps up Tuesday's Crypto Now live show. We thank Edward Isker and Jason Fernandez for their expert analysis. We thank you, the audience, for joining us, and invite you all to accompany us every weekday at this same time.